In this video, I'm going to explain the importance of the breakout of this rising wedge on Bitcoin's daily chart and why this breakout could end up suggesting that Bitcoin's price may keep falling all the way down to $75,000. We're going to analyze how whale behavior is not showing any signs of buying. In other words, large institutions have not started buying Bitcoin, while retail traders, who almost always get it wrong at macro levels, keep buying aggressively. So, what does Bitcoin's price need to do for us to actually turn bullish? That's exactly what we're going to break down. Alright team, let's take a look at the markets. I want to start by telling you that I've updated the macro analysis in depth. I've made a clean reset at the weekly level for the entire crypto ecosystem, and from now on, we're going to look at the bigger picture from a different perspective that I think is quite interesting. This bullish channel on the weekly chart is something several of you have been sharing over time in the Telegram channel, inside Crypto Insight Premium, and even in private messages. Now, we're going to review it carefully because it's going to help us understand what may be coming next for Bitcoin. In the last 2, 3, even 4 months, I can confidently say that several of you have been sending this to me. I'm talking about Bitcoin's macro bullish channel, and every time you sent it, whether privately or publicly, I always told you that it seemed interesting, and here it is. I've decided to bring it back. Why? Because we're currently experiencing a Z wave. Here we have the impulse. This is a hidden trend line, right? Those of you who took the course already know exactly what I'm referring to. But here we have a bearish impulse. This is the W, this is the Y, and all of this forms the Z. A Z wave that on a macro level we've been tracking continuously, and that allowed us to remain bullish on crypto throughout the entire process. So now, let's bring back the concept of the Z wave, because all of this is a Z, and right now we're seeing how it has collapsed, right? How the Z is collapsing in the way it needs to. Now, this in itself does not mean the end of the world. It doesn't necessarily have to. What I mean is that a Z wave can collapse at some point, create a trap, and then continue moving upward. And that's exactly what we've seen before. Here, the Z could have collapsed. It's hard to see the exact point of the trend line because it wasn't clearly offered, but essentially, it's a breakout that fails, and then what? The Z keeps going. Well, could the same thing happen again? Why not? Why wouldn't it? But let's evaluate the following. Up until recently, we were saying that we would stay bullish unless proven otherwise, and on a macro level, that approach is fine, but I think we need to talk more about what's happening right now. What is Bitcoin telling us in the short term? It's telling us that we've broken a rising wedge with a lot of aggression. And the first question we need to ask is, has that wedge already been fully and definitively broken? That's the million-dollar question. So let's reframe it. Is there a possibility that the wedge has not been completely broken yet? That question is much easier to answer. And the answer is yes. It is possible that the wedge hasn't been fully broken. What does that imply? It implies that if the price needs to fall further, it absolutely can fall further. So the question becomes, how are we going to evaluate this? Look, in a very simple way, the most coherent place, in my opinion, where the breakdown of the Z wave should come to an end is around $75,000. And if it creates a trap, it could even stretch down to $71,000. That would be the logical scenario considering the size of the structure. A breakdown of that magnitude wouldn't surprise me at all. Alright, next question. How can we know whether the price is actually going to reach those levels or not? The answer lies in watching whether the institutions that went long here, the same ones that showed us the area they want to defend, can actually defend it or not. If these players protect the level, then the end of the Z wave, the end of the breakdown, is here. At most, we might get a small trap halfway through, with attempts we would deal with later. That would be a different battle, but basically, what we need to watch and think about is this. If institutions don't defend this level, it means the price is heading down here. And if you ask me, yes, including the trap scenario. That's the map drop. So now we need to solve the next unknown, the one that matters to us. Will this zone be broken or not? Or better said, whether we're going to get the reversal at the current price level, which is $89,000. Now, to answer that question, we can't stay on the weekly chart and not even on the daily chart, but we're already starting to see what's happening step by step. I hope it's all making sense so far, team. Let's drop down to the 4-hour time frame. Here we can see the breakout and how aggressive it was. Then we move down to an even smaller time frame. There it is. And it's right here where we become fully aware that we're sitting at an extremely critical level. This exact moment is key. We'll have to see what the hell happens here, because if we lose this level, we're heading much lower. So if earlier we said that on a macro level, we are bullish unless proven otherwise, now, dropping to the 1-hour chart and thinking about the last few days, today, next week, and the following 2 weeks, the narrative changes. We're actually bearish unless proven otherwise. Why? Because we don't know whether the breakdown of the Z-wave is going to end here or whether it's going to end down here. We simply don't know yet. So, what are we seeing right now that institutions might be doing? Let me get straight to it. I'm not seeing any signs that they've started buying. Institutional players in crypto are not buying. And what's even worse is that retail traders keep buying. As long as retail keeps buying the entire drop, buying it in a completely disastrous way, and at the same time institutions are not activating their buy positions, we're going to prioritize the bearish path. Alright, let me show you something interesting. Here, we're looking at Bitcoin's chart on the 1-hour time frame. Same idea. What do we have here? Retail traders keep buying and keep buying. What do we need retail to do? We need them to start selling. Why? Because when retail starts selling, they're basically selling directly to institutions, which means institutions would finally be buying. Right now, we do not have that evidence.
We need to see retail start selling hard. And for that, as I've already mentioned in live streams and previous videos, what we need to see is a master candle, because that master candle is going to trigger all the necessary events for us to stop being bearish. Look at where the focus is right now. The focus is on the fact that in the immediate and short term, there is absolutely nothing suggesting a V-shaped reversal. And this is what I always tell you, right? Look at how, throughout this entire drop, retail traders have been prioritizing buy positions again and again, convincing themselves that every tiny inch of this whole decline was going to be the bottom, and that the price would magically reverse from there. This is when I tell you that it's dangerous to put on the Superman cape and say, well, retail has been getting it wrong since October 6th, but don't worry, because I'm Superman. I'm the smartest in the room, and I know it's now. All those naive people were wrong, but I'm special. I will catch the reversal. That kind of thinking is extremely dangerous. So instead, we need tools that allow us to evaluate when that dynamic is actually going to change. And what is the dynamic that must change? Well, to begin with, we need a proper landing in Bitcoin. If you've studied, we've gone through accumulation processes, how Wyckoff's philosophy works, and everything related to that. Until we see the foundations of that structure, pretending to guess the bottom is simply reckless. So what's happening now? Since we're coming from a major breakdown, a Z-wave, I don't want, nor do I expect, to see a V-shaped reversal as if this were the stock market. Equities, yes, they move in V-shapes, and they don't wait for anyone. But crypto takes its time. And here we can see how, potentially and hypothetically, we might be starting to get a contraction, but nothing here is guaranteed. What do we need to see? Like I said, a master candle. Now, could the current level be a good point for a reversal? Of course, absolutely. We already saw that earlier. On the weekly chart, we saw that Bitcoin is telling us that the zone we're in right now, around 90,000, is a potential area where the drop could end. But it's potential. I'm not telling you, nor guaranteeing you that we're going to keep falling. I don't know that. If you know it with certainty, tell me, but I don't know. What I can tell you is that we're in a key zone where things can happen, and if not, then we'll come down here to 73 or 74,000 without any problem. That's the general outlook. But since we're at a key level, let's think about what needs to happen for us to consider this the bottom of Bitcoin's market. Are we clear up to this point, team? All right. That's basically the whole picture for Bitcoin. So, what chance can we give Bitcoin right now? Look, if they give us a climactic action here, I think that would be fantastic. Honestly, it doesn't matter. If the price drops to 87,000, nothing is confirmed yet. But if that happens, it will be forced to recover with a V-shaped move. If it doesn't recover in a V, then we expect it down at 75,000, and for me, with a trap at 73. But to even think about a reversal scenario, they can still create a trap. They can still do it, and it wouldn't be a problem. But as I said, there would be an obligation to recover in a V-shape. So what's the next requirement? The next requirement is that price must face this structure and break through it with strength. In the future, it will find resistance here, problems it shouldn't take too long to deal with, and that's precisely where we would be obligated to see a master candle. On the 4-hour chart, or even better on the daily chart, that master candle would show something much more powerful, something with real force behind it. And well, take a look at this. This right here is powerful. The market was messing around, and then the big players, the institutions, step in and say, "Hey you, retail trader, what do you think you're doing? You really think we're going to keep going up?" And they slam their cards on the table with full force. They show their power. On the chart, that represents massive momentum. And look at how they trigger a change of character. We were moving upward. The institution puts its weight on the table, and straight down we go. So what do we want to see for a trend reversal? A master candle. We want to see the equivalent move, but upward. Micro black swans forming in key structures, in favor of the trend. And how would that be reflected in the real behavior of retail? Simple. The moment retail sees a master candle to the upside, they'll say, "All right, time to sell." And that's when we could finally see a shift in retail dynamics, while hopefully seeing stronger buying continuity from institutions. But right now, we don't have that. What we're seeing here is a complete nothing burger. There's nothing, absolutely nothing, showing that institutions are buying. So looking for a V-shaped reversal right now is acting like the smartest guy in the room, and I already explained what happens to that guy throughout this whole decline. We don't need to play that role. We have tools and methods to evaluate all of this properly.
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
And if you enjoyed this advanced technical analysis, leave a comment with your opinion. Make sure to like the video, subscribe to the channel, and hit the notification bell so YouTube alerts you about future uploads. Good luck with your trading, and see you next time.